Know China to do better business. Save time and money with expert insights on China trade and investment. Welcome to our channel Trade with China. Today we are going to explore one of the most exciting investment opportunities in China, the pilot-free trade zones. If you're looking to expand your business into China or strengthen your trade partnerships, this video is exactly what you need to know.
Imagine having access to 22 carefully designed business zones across China, each offering simplified regulations, streamlined customs procedures, and exclusive financial incentives.
These aren't just ordinary industrial parks. They represent China's commitment to high-standard open market practices. We're talking about special economic areas that actively compete to attract international investors by continuously relaxing restrictions and introducing pro-business policies.
The Chinese government established these pilot-free trade zones as testing grounds for innovative business reforms.
Think of them as laboratories where new policies are tested before being rolled out nationwide. This means you get early access to advantageous business rules that haven't reached other regions yet.
Since 2013, these zones have grown from just 1 to 22 today,
expanding across every major economic region, from Shanghai in the east to Shenzhen in the west.
Key performance metrics. Let's talk numbers, because numbers tell the real story about opportunity. In 2024, the numbers are genuinely impressive. First, trade performance.
The combined import and export volume across all 22 zones reached 8.59 trillion Chinese yuan. That's nearly $9 trillion in transaction value.
Most importantly, this grew at 11.9% year-on-year.
To put this in perspective, the national average growth rate was only 5%. These zones are growing more than twice as fast as the rest of China's economy. These zones handled 19.6% of China's entire national trade volume, while occupying less than 0.1% of China's total land area.
That's extraordinary density and efficiency.
Breaking down the trade, exports hit 4 trillion yuan, growing at 18.8%. Nearly 4 times faster than the national average. Imports reached 4.6 trillion yuan, growing at 6.5%. Every single metric outperforms the national average, signaling consistent investor confidence. Second, foreign direct investment is flooding in. In 2024, actual utilized foreign investment in these zones totaled $200.83 billion. This represents 24.3% of China's total foreign direct investment. Just 1 year earlier, the figure was only 19%. These zones are becoming increasingly attractive to international capital. Think about what this means. Nearly 1 out of every 4 investment dollars entering China goes directly into these zones. Investors see them as lower risk, higher reward environments. Additionally, 7,582 new foreign invested enterprises were established in 2024. That's a 13.1% year-on-year increase, which is 3.2 percentage points above the national average. Third, let's look at exceptional regional performers. Jiangsu Zone reported 53.1% investment growth. Liaoning achieved 44.3%. Hunan reached 26.7%. Even newer zones like Xinjiang, operating for just 1 year, have already captured 30% of their region's total foreign trade, despite occupying only 0.01% of the region's land area. Policy innovations and business advantages. Now, why are investors choosing these zones? The answer lies in the specific policies designed to reduce barriers. China released 77 major institutional innovations in 2024. These cover everything from customs clearance, taxation, to financial services. Let me highlight the most impactful ones for international investors. First, customs facilitation has been dramatically streamlined. Air express shipments now clear customs within 6 hours. Previously, this could take days. For companies moving time-sensitive products, this represents significant cost savings. Second, the negative list for cross-border services has been substantially shortened. What's a negative list? It's the list of sectors or activities prohibited for foreign companies. Shorter negative lists mean more opportunities. The zone version contains 68 restrictions compared to the national version's 71, a meaningful narrowing. More importantly, restrictions have been lifted in telecommunications, healthcare research, professional services, and cultural industries. Foreign investors can now apply for telecommunications business licenses without equity restrictions in Beijing, Shanghai, and special zones. Gene therapy and stem cell research ventures can now operate. These represent truly cutting-edge sectors. Third, financial services have been revolutionized. The Shanghai Data Exchange handled 4 billion yuan in data trading in 2024, quadruple the 2023 volume. Over 4,500 data products are now listed and tradable. For technology and analytics companies, this creates entirely new business models. Fourth, offshore trade benefits from tax incentives. Shanghai's offshore trade market reached $90 billion in 2024, a 75% jump year-on-year. The government has granted over 100 million yuan in stamp duty exemptions to encourage this activity.
The impact on investors and traders' practical benefits. What does this mean for someone like you considering Chinese operations?
Lower operational costs, tariff exemptions on repaired goods returning to China, reduced customs documentation, and streamlined processes mean your supply chain operates more efficiently and costs drop. One enterprise reduced certification costs by 1/3 simply by relocating to a zone. Faster market access, digital RMB cross-border payments, electronic invoicing, and mutual recognition agreements with partner countries accelerate your time to market.
No waiting weeks for regulatory approvals.
Broader service access. You can now easily hire international talent, access foreign financial services, and collaborate with overseas research institutions, all within regulatory frameworks specifically designed for zones. Higher returns on investment. With 24.3% of China's foreign investment concentrated in these zones, capital is being deployed efficiently.
Stock Connect programs between China and Hong Kong have expanded,
offering international investors new portfolio opportunities.
Foreign banks registered in China can now conduct secondary transfers of syndicated loans, new financial products previously unavailable.
Technology transfer opportunities. Intellectual property protection has been strengthened. Data trading platforms operate transparently.
Technology-based companies can securitize their IP rights to raise capital, a revolutionary model launched in Shanghai zone.
Regional opportunities, where to focus. Different zones offer different advantages. Choose based on your industry. Shanghai dominates financial innovation, digital trading, and high-tech manufacturing. Shenzhen, Guangdong leads in AA, semiconductor design, and supply chain optimization. Beijing specializes in tech startups, venture capital, and innovation zones. Tianjin focuses on advanced manufacturing and cross-border finance. Chongqing specialize in automotive, advanced materials, and e-commerce.
Hunan, positioned as the Africa-China cooperation hub. Fujian, bridge for cross-strait Taiwan trade and manufacturing partnerships. Each zone publishes detailed investment guides and maintains investor relations teams ready to assist.
This isn't abstract opportunity. There are people on the ground ready to help you navigate. These zones provide measurable competitive advantages. Compliance ease. 77 institutional innovations mean you operate under clearer, more international standard rules. You spend less time managing regulatory confusion. Speed. Customs clearance in hours instead of days. Processing times measured in minutes for high-credit enterprises.
Offshore trade verification now takes 30 minutes instead of 1 to 2 days. Scale. Operate within China's largest, most dynamic markets while enjoying preferential treatment.
Your competitors operating outside zones face additional restrictions and costs.
Innovation access.
Early adoption of new financial instruments, digital trade platforms,
and IP securitization models gives you first-mover advantage in emerging sectors.
Risk management. Clear legal frameworks, transparent dispute resolution, and international judicial cooperation mean your investments receive strong legal protection. Whether you're a manufacturer seeking cost advantages, a trader expanding into Asia, a financial services company targeting digital innovation, or a technology firm seeking IP protection and talent access, these zones create pathways to sustainable, profitable growth in China. The evidence is clear. 8.59 trillion yuan in annual trade, 200 billion US in foreign investment concentrated in 2024, and growth rates 2 to 5 times above national averages. These aren't speculative claims. These are documented realities from China's own official statistics.
If you found this breakdown valuable,
Subscribe to our channel for regular updates on China's economic developments, trade policy changes, and investment opportunities specifically tailored for international business professionals. Our channel delivers expert insights in accessible language, helping you make informed decisions without the confusion.
thank you for joining Trade with China.